Let's be honest, we've been told for years that real estate never loses. That home prices might cool off, but they'll always bounce back. Well, 2025 is proving that's not exactly true. Across America, from small southern towns to high-end coastal cities, home prices are falling, and in some places they're falling fast. So today, we're diving into 35 US towns and metros where home prices are crashing, what's driving the downturn, and what it means for buyers, sellers, and investors. Stick around, because if your hometown's not on this list, it could be next. 1. The California correction. We have to start with California, because the Golden State is shining a little less brightly right now. Oakland, San Francisco, and San Jose are all seeing real price declines. Not just slower growth, but actual drops. The Bay Area's once unstoppable market is cooling as tech layoffs, remote work, and affordability all collide. In San Francisco, condos that sold for $1.2 million 2 years ago are now selling in the $900s. That's a 20 to 25% correction in some neighborhoods. San Jose and Oakland are seeing the same pattern: fewer bidding wars, rising inventory, and sellers who finally realize that 2022 prices are gone. Even Sacramento, once the refuge for Bay Area buyers fleeing sky-high prices, is now sliding backward as interest rates squeeze affordability. And down south, San Diego isn't immune. Prices there have flattened and even dipped in certain areas, as out-of-state demand slows and new construction fills the gap. 2. The Texas turnaround now. Let's head to Texas, one of the biggest winners during the pandemic boom. People flock to Austin, Dallas, Houston, and San Antonio for cheaper homes and lower taxes. But those cheap homes aren't so cheap anymore, and the correction has arrived. Austin, once the hottest market in America, is now one of the coldest. Median home prices are down nearly 15% from their 22 peak. The same houses that sparked 20-offer bidding wars are sitting unsold for months. Dallas and Houston haven't fallen as hard overall, but certain suburbs, especially new build areas where supply exploded, are clearly in correction territory. And even San Antonio, long a stable market, has seen prices retreat after investors overbought and oversupplied. Texas isn't collapsing, but it's recalibrating. The pandemic growth was unsustainable and reality is setting in. 3. The Florida fade. Florida's market went from red hot to red alert. During the pandemic, Miami, Tampa, and West Palm Beach saw people and investors flood in from New York, California, and Chicago. Prices skyrocketed. Now many of those same buyers are gone, and so are the easy profits. Miami's luxury condos are lingering on the market. Tampa and Orlando have both seen prices flatten and then slip, while Jacksonville and Cape Coral are showing real price declines. In Fort Myers and Northport, overbuilding and insurance costs are hitting hard. Some buyers can't even get affordable coverage, and that's forcing them to walk away. The problem? Florida's population boom pushed prices far above what locals can afford, and with higher rates, the demand just isn't there anymore. 4. The Western slide heading west. Let's talk Arizona, Nevada, Colorado, and the Pacific Northwest. Phoenix and Las Vegas were two of the biggest boom towns of the pandemic. They're also two of the biggest busts now. In Phoenix, prices are down more than 10% from the peak, and inventory keeps climbing. Builders who were sold out in 2021 are now offering rate buy-downs and cash incentives. Las Vegas, same story. The investors are gone, the tourists are back, but the housing market? Sluggish. Denver was supposed to be immune, but not this time. Even there, buyers are walking away from overpriced homes as mortgage payments soar. And in the Pacific Northwest, Portland and Seattle are seeing double-digit percentage declines from their highs. Remote work shifted demand and expensive city life isn't as appealing as it used to be. 5. The Midwest and Northeast markets. The slowdown isn't just coastal. In the Midwest, cities like Detroit, Cleveland, and Buffalo are facing renewed weakness, not because they spiked too high, but because demand is stagnant and population growth is minimal. Chicago is a mixed story. Downtown condos are soft while suburban single-family homes are holding up. But overall, prices have dipped slightly as the market rebalances. In the Northeast, Providence, Rhode Island has been surprisingly weak lately. That pandemic-era buyer surge from Boston has faded, and homes are sitting longer. Even parts of New York State, outside the city, are rolling over. Small towns that benefited from the Zoom migration are cooling off as remote workers return to offices or relocate again. 6. The smaller town shock now. Here is where things get really interesting. The smaller towns that almost no one is talking about. Markets like Greenville, Clarksdale, and Cleveland, Mississippi, have all seen measurable price declines, according to regional data. These areas saw big investor interest in 2021 and 2022, when cheap homes looked like cash flow gold mines. But with higher rates and slowing rents, some investors are now selling at a loss. In Texas, smaller markets like Pecos and Midland are wobbling too, thanks to volatility in oil prices and local job markets. And along the Carolina coast, Wilmington, North Carolina, which boomed with pandemic migration, is seeing homes sit for 60, even 90 days, with more price cuts than we've seen in years. Even Albuquerque, New Mexico, which quietly surged during 2021, is now cooling off as buyers disappear and investors cash out. 7. Why it's happening? So what's really behind all this? Why are home prices crashing in so many different parts of the country? 3 main reasons, and each one feeds the others. First, rate shock. Mortgage rates have more than doubled since 2021. The average buyer who could afford a $600,000 home 3 years ago can now only afford $400,000, if that. That's a huge hit to demand. Second, overbuilding and speculation. Builders and investors went all in during the boom. Some towns literally doubled their housing stock in a few years. When demand slowed, inventory piled up. And third, the Great Migration hangover. During the pandemic, millions of people moved, often cross-country, chasing cheaper housing, remote work, or lifestyle upgrades. But as companies call people back to offices and as weather, insurance, and affordability issues rise, some of those migration trends are reversing. When people leave, prices follow. 8. What it means for buyers, sellers, and investors. If you're a buyer, don't assume crash means free houses. It doesn't, but you finally have leverage. Ask for repairs. Negotiate closing costs. Look for homes that have been sitting on the market, and be patient. If you're a seller, pricing is everything. You can't compare your home to what it was worth in 2022. Price realistically. Make it look good, and understand that it might take longer to sell. And if you're an investor, now's the time to focus on fundamentals, cash flow, rental stability, and location. Forget the flip game unless you're buying truly distressed deals. 9. What comes next though? Is this a full-blown housing crash? Not everywhere. But in many of these 35 towns, the answer is yes, at least locally. We're seeing double-digit price declines, longer selling times, and a huge shift in sentiment. The fear of missing out that drove the last boom has turned into the fear of overpaying. And that psychology change, once it sets in, takes time to unwind. The next year could bring more of this slow deflation, especially if rates stay high and job growth slows. But for the long term, corrections like this are healthy. They bring markets back to reality, open up opportunities, and remind people that real estate isn't a guaranteed rocket ship. It has a cycle. 10. Closing. So that you have it to 35 towns and cities across America where home prices are falling. And the lessons they're teaching us about what comes next. From San Francisco to Austin, from Miami to Wilmington, the message is the same. The housing market is correcting, and the power is shifting back to the buyer. If you found this helpful, make sure to hit the like button and subscribe because I'm doing deep dives on several of these markets next. Drop a comment with the city you want me to cover, and I'll show you the real numbers behind the headlines. Because one thing's for sure, in 2025, the US housing market isn't just cooling off, it's finally coming back down to earth.